start it, kick it off. So we had the seminar last week, the 3 sessions, worked out well. I mean, I was really happy with the content and what we were able to achieve there. Those webinars are available on the Gold Members page for Gold members. So please check that out. Also, the other thing that I was telling everyone, make sure you watch the course from January as well. So here's the course 1, 2, and the 3rd session. That was from last week. But our course 1, 2, and 3, between all of that, it covers all of the advanced strategies, everything that we use with the software. So please check that out. If you are new, entirely new, the best place to start is to go to the home page and register as a basic member. Go to the basic members page and then access the books, the resources, the software, all of that. If you want to try out to the TradingView program, please send an email to me at harmonictrader@gmail.com. It's the best place to do it. And it'll answer those courses, and those programs will answer all of your questions. Okay, so what is HOP? Okay, what is HOP? Harmonic optimal price. Exactly. But HOP is a concept that is available in the volume 3 book. And hey, this isn't a bad place to start. So go to basic members page, click on your volume 3, access volume 3. Now, if you want to read about what the HOP is, go down, I think it's about page 270. Maybe it's 280, somewhere in there. And I'll have to look at this. And we're looking for the layering, basically kind of an extension zone. And it escapes me at the moment the exact page. Maybe it was 270. But just click on volume 3 and go through the layering concepts. I'm going to have to go back and I'll post it. Maybe I'll put it on Twitter. Just the basic information. Also, in the volume 3 is a lot of the material that we covered in the seminar. So if you're interested and maybe you want to read the book, just click on the volume 3 PDF and go through all of those concepts. I don't think those are as well known. Type 1, type 2, type 1 reaction, type 2 reversal. We also introduced the type 2 return trade. That's what happens in between. So take a look at that stuff. We're going to talk about that today relative to what's going on in NASDAQ. Because I think that's got everything we want to see of us trying to measure, define limits, and then really scrape out where the changes are happening. Will there be a volume 4 book in the future? No. No, I think everything I've done with the patterns has been done that I want to do. A lot of the new information, yeah, that could probably be squeezed into a book, but I don't think people read anymore. So they're all really getting a lot of the information through the videos, the numerous videos like I've been doing, and the courses. It's a really feel like that's the best way to do it. Volume 3 is great. It's probably, I think, next to Volume 2, probably the most advanced stuff. And I highly recommend that you do read the books and get the books. But writing books, no. I encourage everybody to spend their time on the software because the videos will show you what to be looking for. And as we outlined in the course, here's NASDAQ, and we're at 2 of 2. There's our type 1 reaction. Here's the type 2 return. And we talked about this very situation in the course of how this had everything and even a little bit of the real world type 1, type 2 behavior of it not being exactly perfect. Like this is a viable type 2 retest with confirmation everything, but it didn't get you to target 2, which is all the way down at 11,000 whatever. Are we going to get there? Are we going to realize target 2? Well, we're going to see. We're going to see, and I mean literally by next week, of how we unfold from here. The hop level, which is our structural kind of secondary test level, was reached last week. 14,365 has been a big number for us and gold members. But again, that was our minimum target for this retest. Now we have the confirmation right there. So structurally, it starts here from a confirmation perspective, which is what we need. Really, we can start looking at the actionability of this type 2 condition right here, with the final point being you got to break the uptrend. So we're still considering this whole segment, if you will, as a type 2 and looking for target 2. Yeah, I know it sounds crazy, right? But that's how we look at it. And we look at it and we break it down that we know, and just look at the last several days. That's why it's been so critical this week. Okay, this is the exact spot. 365, right there. 14,365 hits the hop level, and it closes on that day right there. But no confirmation, just continues higher on a bar over bar progression. Bang, there's your first spot at hitting this retest on the check back. But look what goes strong straight on through. Look at where your close is. And that was something else we talked about. Do we even get like a reversal bar, a 3-bar reversal? That was something else we talked about in that session. Green bar, green bar, green bar, finally a red candle. That's pretty strong. I mean, you're looking at some strong action in a spot where this thing should be turning down. So we'll give it the week. Really important. But a lot of strong signs up here. And as we discussed, we would then look at our higher time frame for the next set of signals. And we've seen this on S&P 500, where actually the longer term time frame triggered some bullish readings. So here's weekly, and look at our indicators. All three across the board are in the overbought, but expanding. So we know that's going to take more time. And we're going to what? We're going to finish the week on the all-time high. Pretty close. That's all strength, folks. Even look at the last, since the May bottom, it's been straight up, week over week over week over week. So there's just, I mean, extremely strong, about as strong as it can be. And the only couple of levels to really consider up here is obviously 15,000 as a psychological level. But retracement levels, there's not much. I mean, this thing is on a rope, as they say, continuing higher. So I hate to chase stuff like this, and I'm not going to, but I do want to respect how strong the last, think about it, that's a year after the pandemic. Okay, that's what it did in the last year, and there's the pandemic recovery. So it's a real fierce trend in the face of some dramatic harmonic pattern action. And again, we're 3 days away or less, 3 sessions away. And you could probably break it down to the whole thing fitting within this zone of that check back range. And you go above these highs and go above 15,000, there's nothing. Couple questions. Here's a question. Been wondering how much to measure legs from and where to spot the harmonic numbers. Yeah. Listen, I understand what you're saying. You're saying how to measure if you're going to do it manually, how to find the right time frame of the pattern. A lot of these questions are answered by the automated identification software, because the uncertainty of knowing, are you even measuring a proper harmonic? That's the title of today's presentation. What's harmonic? What harmonic? What is it that really is harmonic? Because we can draw M and W's all day long. But if we don't know and understand why we're measuring what we're measuring, what does it mean, then we're just, you're randomly assigning value to areas that have no support or resistance aspect to them. Yes, this hop level is a resistance target, but it's not an exact resistance level. And it's based off of this prior XA leg, but that alone does not mean that it's, just immediately that's it, the end all be all tank move. So to remove that, again, that's why I stress to everyone that you operate off of automatically identified patterns, all right, and work within the framework of the time frame that the pattern's been generated. We have a daily pattern here, so it's daily assessments, longer term assessments. I mean, go to even this morning. Here's an NQ. There's a 5 minute. Okay, look at what's going on right now. We're hitting a 5 minute deep crab right here. Why? Because it's been identified on the 5 minute time frame. Now, if you go back to the course in January, that we go over in detail in the identification seminar. I think that thing's almost 2 hours long of why. I mean, all of the different intricacies. So do review that. But again, I'm here to highlight type 1, type 2, okay? And let the software do the identification. That will remove that level of uncertainty. Remember, everything we're doing is identification, execution, and management. We remove all the mistakes with identification with the software. So then we shift our decision making to execution, which is essentially what last week was about, type 1, type 2. So this is type 1 reaction. Let me highlight the terminal bar, because what you're saying is, I think, a real valid point, and a lot of people kind of get turned around, especially when they try to do it manually. I mean, you can measure by hand, but um, you have to take out that human error part of it and understand that you need to have uniform measurements to define opportunities. Otherwise, you're making subjective decisions. And I'll credit Mark Douglas on that one, because that's who taught me that. Subjective decisions will kill you. So patterns are not subjective, as long as we definitely understand that we are dealing with the proper framework that's getting measured. So it is absolutely essential. That's why I pound the table on the software. And we've got idiots selling harmonic pattern software. All right. Yeah, they're out there. And they're just trying to, sell anything as a bat or a Gartley or crab. They have no clue what a true harmonic is. That was the whole point of the course from last week. What is a true harmonic? Like, take a look. Look at the last three patterns on the 5 minute time frame for NASDAQ last 24 hours. Bearish crab, I mean, real nice type 1. There's deep crab too, from there to there. Followed by a perfect type 1, doink, type 2 bat pattern. Back to the type 2. I mean, I think if we can get away from, and let me just remove the patterns and we can outline this. There you go. Let me remove the patterns, and just understanding where those ones and two, the 1, 2 come in. We're not going to know that if we don't have our patterns on there. And you could draw a whole bunch of patterns, You could draw, there's probably a few different combinations because, again, to the point within your question of which ratios, when they fall in between, again, these are all come down to certain constraints that are essential to defining what's harmonic. So, again, look at the bearish. So, here's your bearish patterns and look at what is harmonic. And based on the course and everything we did last week and stuff in January of understanding where the type 1, type 2 uh, come into play. I mean, look at this. Here's the type 1. There's your actual exact type 2. All right, so you go from hop to target 1. Now we're trying to get from hop to target 2. You don't get down there. You get almost close, but you do have HSI right there. Now look at the bullish pattern in between these two. All right, now check out the butterfly, or sorry, the bat pattern. This is a little sloppier, but again, it has all of the metrics, and this is important, even though this is a sloppy pattern, it has all of the metrics that show us one right there at the sun icon. That's the true harmonic level at around 14,670. Even though it went to 650, it's still a valid bat pattern based on what the true harmonic is. And then the fact that this does the 1-2, does a type 1 reaction up to target 1 off the hop. I mean, comes back exactly on a type 2 right there to there. And then bang, you go up to target 2. The rest is gravy. All right, it's like that. And then blast off. So it's working within that 1-2. And the reason why we focus so much on the minimums of this framework is because if you can be, let's say if you're here, let's say the bat's just completing or it looks terrible, ugly, and then it comes up to target 1 and it registers HSI and it registers your target, hits target 1, and it breaks the trend line and starts to roll over, well, you know to hit the eject button. Because if you're, let's say you're here and you're rolling over, you're going to go for a full retest. So hits the retest, and what do we need? We need confirmation. Those are the two rules of what we talked about. So bang, there it is, and you're going from your confirmation checkback point, which is there's your arrow. The arrow forms on the close of that bar, and then 1, 2, 3 bars later, you retest the low and then go. That's how we look at it. That's HSI checkback, and we're triggering for 14,700 from 670. Now, the reason why we look at that is because we are trying to think of this in minimums. I don't know that that's going to 14.8, but that's what it did. How did we get there? Well, we never rolled over. We never violated aggressive trend line. And the target 2, that once that thing violated the HSI, it never looked back. So that's why you have to look at this stuff in a step-by-step fashion. That's what we talked about in the sessions last week. And look at that. 1, 2, 3. Hits that a couple of times. Go to, let me see here. Where's that 233 tick? There's something right now. I think the 233 tick. I think right up at 30. No, I'll have to come back to this. I think there's something up here right now for today at 8:30. Yeah, there it is. Deep crab in a 1 minute. Sorry. Hop level. All right, this is a great example of beautiful pattern, type 1, but riddled with problems. Riddled. If you were looking to execute off this bearish pattern, let's just highlight some of the problems. So first of all, we know it's harmonic. It's harmonic because we have the pattern match. we have the proper metrics, and just look at the deep crab and let's isolate that last deep crab. All right, so there's terminal bar all the way back here. But check out what happens at 11 o'clock this morning. Perfect bullish HSI at 72. That's not something that is going to get you anywhere in a bearish situation. If anything, if you were trying to execute off of that terminal bar, well, you got stopped out because of that bullish HSI. So then it comes back up, and there's your next shot. Why? There's your second HSI. And as we discussed in the course, 2 shots. Expect to take 2 chances on 2 shots, 2 trades on every setup. We're trying to get to target 1 here. All right. Right now, we're looking at it right now. We're trying to get back to 14,747. You're trading 810 at the moment. Okay. What are the triggers up here? Those 2 HSI, great. Once you get in there, and this is to the question of the 30 bar question. Okay. Somebody's asking about, well, how do we use the 30 bar rule? The 30 bar rule means once we get confirmation, which is here, or even the check back point, which is here, okay, start counting 30 bars. So from that to the right, count 30 bars. You're like 5, 10, 15, 20, 25, 30 bars is like there. What are you doing? You're still going up. What happens? You register another bullish HSI. All of that should tell you to scratch that trade and look for the next bearish HSI at a minimum. What are the other things doing? Like, all right, take a look. There's a 1 minute RSI BAM. This is actually quite strong. Look, another bullish HSI here. Okay, you have a complex structure on amplified, complex structure on standard RSI. Both of these are going to return and go back up. Looks, I mean, that's a lot of things in that 1 minute. They're shaping up quite well for the afternoon. And this looks like it's got failure written all over it. That's not an easy read, but there's a lot of things there that I would not be a part of that pattern. I mean, that's a harmonic pattern, but it's not a harmonic actionable opportunity. Give me another trigger on HSI or get amplified up here, something up in that zone in the hop area, 813, 815, that would trigger me off of this zone. And again, we're still in type 1, in a type 1 reaction. So if we get that move, that's what we're targeting. But that's all. No trigger there, and it kind of loses its effect after this thing keeps going sideways. It looks like this thing wants to climb and keep climbing. I appreciate that comment, Scott. Yeah, I mean, there's people that do have the program. I mean, people that have the program, no. So again, it's you're working with the program, and a lot of the questions that, if you're new to this, that may arise, um, utilizing a program like this versus manually measuring, it doesn't take long to see why there's such a difference. TLT crush today, might get a sell-off in QQQ. Yeah, I agree with that. Look, we're up against all of the levels that we could measure. Anything else that's here is just completely overextended territory. So the hop level at 14,365, our confirmation at 14,800. You know, it's a 14,750 or something. Yeah, a lot of things are there that are saying this is gone quite a distance. Here's S&P. I mean, there's okay, so the ABCD on NASDAQ daily as well. I forgot to mention that. That's another generated harmonic level with a hop at around 15, 13. 15,013. So keep an eye on that. I think we talked about this in the gold members yesterday, but this one looks like a complex structure as well. It's almost there. I mean, this inflection is really close. And again, I think if you're going to scrape these upper levels, that's about it. Southwest on a 4-hour time frame on a type 1. I'll take a look. Yes, some of those have been extremely strong. I think others are waiting for a type 2 pullback. Oh yeah, look at here's Southwest Airlines. I'm getting a crab here all the way down at 44. Let me see here. Well, we do have a bat, so I've got two things, a potential crab and a potential bat. What do you do in that situation? I go off what the indicators tell me. So all three across the board are holding at the hop. But what's the daily look like? I prefer daily on stuff like this. See, there you go. Daily's much the same. Let's just look at what the completed structure is saying. There on the daily, I like that. Nothing wrong with that. There's Southwest. Right off the hop at 50, 50 and change. So that's a perfect type 1. And I don't know much about this trade beyond shooting up for target 1 to 57. And I mean, that's a nice reversal there. Really tough to spend that much time in the zone overbought and then get a pop right off the hop. But hey, if this is going to go, you got plenty of time on this. Plenty of time. I like that. Check that out. How is gold? Gold is actually gold's much kind of in the final throes of the type 2. Here's gold on the daily. We have a couple things here. I mean, this big ABCD that kicked off earlier in the year, but really what this is all about is the big bat pattern, and many of you know that. And I'm going to stick with this until we get down there. This is a lot like that NASDAQ chart we just saw on the 5-minute time frame. Perfect confirmation, type 1, up to our target. There's HSI. Now come back down for the reaction. We've bounced in recent sessions. We came really close. I mean, within what, 30 bucks of our big 886 at 1720. That is the number where we would look for this secondary retest type 2 completion. So even though gold's up a little bit, I'm still waiting for this thing to retest the full pattern zone. So look at that from within the 1-2 framework. Yes, that could go as low as the hop. I'm not, I've said that all along. I think we need to look at 1720 or under 1720 first. And then the big move in gold would come off of a type 2 launch. So we're in the midst of a type 2 return, which is what we discussed last week. And now we'll see how long it'll take to get back for the full retest. Can I check trading view on what? On the Southwest chart? Yeah, I can pull that up really quick. This is the trading view program. And so here you go. This is Harmonic Pattern Collection Lite, Lite, not the Pro version because we couldn't get everything in there. But we did, and I did want to mention this as kind of our announcement here. Ooh, nice one on the 4-hour. So that's trading view, and this is the 4 hour um, harmonic pattern collection light, and that's Southwest. Again, that's a little bit different, and again, that's a 4 hour time frame. So just use the shorter framework. But yeah, I like that as a type one up to 55.80. You're trading 52.50. A nice type one reaction. And does the daily have the same pattern? How's that bat pattern? Yes. The sometimes we're going to get discrepancy, folks, between the pro and the light version. It just depends on the data feed. Sometimes it will be different, but most of them are connected. They usually are. We've designed it so that they generate uh, the similar results, equivalent results as much as possible. Again, most of the limitations are the platform script. It's not us, or we would already have it built in, just to let you know. I like that on Southwest, and that's something we should probably follow up on in coming weeks. I mean, that's right there in the hole, ready to pop out. I'm sure the other airlines and probably travel look the same. Let's look at, say, oh, I don't know. Let's look at Marriott. Where are they? Mm, nice crab pattern. That's a 1-2. Look at that 1-2. It's really tough to see it. And again, you're never, if you're going to draw it by hand, you're not going to be able to catch it. But check out why this is where it is. Because there's your type 1 move off the pattern. Come back for a type 2, and there's the confirmation. All right, that's a critical aspect of the retest. You need confirmation, folks. And that's how we get from there to target 2. So, and this is still strong. I mean, that's probably goes to new highs from here. On the weekly, what's that look like? Oh, yeah, that'll get out. Yep. And this, so this is a question about someone's asking, how do you use harmonic patterns for long-term investment decisions? I think it's a great question. Um, Here's a couple of ways. All right, one, you can line up, you want to invest in a stock long term, like Walmart. All right, how are we going to use harmonic patterns for something like that? Well, let's look at the framework. Let's look at where it is, say, on a weekly or monthly time frame, and then break it down. Because something like Walmart, I think, hey, I'll put it away for my kid, and come back to this at in 20 years when it's trading at $500,000-$600,000 a share, maybe. Who knows? But how do I know whether that's a good spot? Is this going to keep going up or not? Or going to go sideways? So I would look at that in the same way, type 1, type 2, and look at that on monthly or weekly time frame. This is in a type, well, it's still type 1, and, or no, I'm sorry, it's a type 2. It's really tricky to see, but this is why you need the software to automatically measure it out. Because if I think what the breakthrough for a lot of people last week was not only the fact that type 1, type 2 happen, but it's almost mandatory for harmonic patterns. As kind of the feedback I got from those that were there and have watched the course, where once they realize the type 1, type 2, then it's almost like an additional leg to the pattern. So check this out. Walmart on the weekly, and this is a great way to look at this because of the intricacies of the price action, it could easily obscure how this unfolded. But if we know this, or we can recognize this, and it is my intention to program this where we can have the type 1 marked, the type 2 marked, that will make it even easier. But if you understand it manually, you'll really get it. So here's where the pattern completes on that week for Walmart back in March. It forms the peak, it hits the 1618. All right, so we close the week, we open up here, we rally up to 128, right? And then slam back down. And we close here. We open the week here incredibly and close the week on the right side of the candle. That's how you read candles. So amazingly, that type 1 happened all within that week. In that one bar, you had a 1 bar immediate 1618 reaction, and then you had the retest begin, all within that very tight uh, conglomeration of trading history. So in effect, I'm looking at that. If I can understand that's type 1 or type 2, there's a pattern there, then I just ask myself the other questions of where's the confirmation? What's it doing off of the confirmation? Then it'll fill in the picture. I mean, for the weekly time frame, if I wanted to invest, quote unquote, in Walmart, well, I'm not going to do it at the completion of a crab pattern type 2 with HSI confirmation. If it's right there. We talked about this in the course about Coca-Cola. It's the same kind of a deal where we want to trigger long-term decisions at the completion of long-term patterns or long-term levels or long-term HSIs. So I would look at that and say, hey, that HSI on the weekly might be a great continuation point, but what else is here? So go to the daily. In the daily time frame, check out what we have. So beautiful bat pattern, type 1, absolutely. Coming up. Now we're done. We're actually in the type 2 return. There is confirmation of HSI right there. Let me highlight that so you can see that. So that's where the type 1 ends. And type 2 really begins on the breakdown. I would say really on the 3-bar breakdown here, but we can really say that it broke down on the last failure of the prior high, even if you want to stretch out your trend line. You see how I keep lowering the trend, my trend line. It failed, really, the first trend line failed there. Now, having broken that all down, looking at the weekly, and we see a weekly bullish HSI, we have a bearish zone, but you have another daily pattern that's forming a type 2. So the way to break down that workout of Walmart is to say, hey, there's a great type 2, and we always want those type 2 bullish pattern. I would think of that as a continuation pattern in Walmart around anywhere 132 as low as 126. But if I'm looking for this thing to launch and continue the multi-year uptrend, it's probably off of this bat pattern down towards the hop, where then we get an extended leg that just continues and we see new highs and Walmart just keeps going on forever. Isn't there a bar limit for a type 2? It depends on the trigger. You have to have the trigger and then you start the count. Cisco has a perfect crab on the minute chart. All right, look at it. The 1 minute or the 5 minute? Oh yeah, well there's a crab. 1 minute crab pattern, but that's again, there's type 1. That's type 1 all over the place. Why? Because you come off the 1618, you're targeting target 1, but where does HSI show up? It shows up closer to target 2. That's how we know. When you're looking for the level and then tell me where the confirmation comes in. In this instance, okay, you got 2 of 3. Looks like you're still headed back up. You know, RSI going up. Amplified still up. Even HSI is going up again. So that would still be up for now, but I hear what you're saying as a day trade, and I would still be looking for that to eventually come back for the type 2 retest. Again, that's just how we draw it out. How to increase the confluence in harmonic patterns? Well, I think what you're really asking is how to find the best, most reliable, actionable harmonic pattern opportunities. And for me, I think those come down to real defined patterns like the crab or the bat, type 1, type 2, ideal conformation, a lot of things that line up. Um, Let me bring up, where was that other? Hmm, what was that other one? Oh, I know what it was. Let's go over to the TradingView platform. Um, BlackBerry is almost at its big target. We've been waiting on that one. Yeah, check this out. So we've been looking for this to do a real big looping back-to-back pattern, if you will. Um, yeah. Oh, there's an hour. Well, that on the hourly, yeah, okay. Hourly has a crab pattern. That's not what I wanted. I wanted the 4 hour. I would still look for that. Oh, that did do a type 2. It got underneath 11. Check this out really quick. So BlackBerry did it today. I didn't see this yet. So it came back yesterday towards the close. Did we get that? I have to check. It really does matter if we hit 1108 or not. But if you go to the 4 hour chart, we are now back down into the long awaited zone of, remember this big, yeah, this big bat pattern. It has an ABCD at 1150 off of the top. That's huge. So we can start really looking at this. This has got everything that you want to see for type 1, type 2. I would love to see a little pattern, which we have on the hourly. Again, next week. If you're looking for these meme stocks to do the things that they're, big runs, it's still going to line up type 1, type 2. We saw that in AMC. Um, Here's another one that's going to come all the way back. It's amazing, but Canopy Growth. And a lot of those cannabis stocks are coming back for the massive type 2s. And Canopy is lower, and the cannabis stocks have not been performing well. So my bet is this just keeps dropping. Let me highlight this. Where's the weekly? There it is. You cannot escape these 1-2s. You can't. I just, it's, we had that huge surge up, I know, and that crazy mania, and now we're going to come back down. And so even with CGC, yeah, I'm targeting like 1650, maybe as low as 14. I'll check cable in a second. Yeah, Newegg, Neg. Yeah, I don't, that stuff that's gone too far, I can't really do anything with it. It's like it would, the new egg is, I know what it is, but it would be like trying to look at CGC for a long, like here. We just can't look at it like that. We got to be looking at these type 2s, looking for the big retest down and then blast and go. Can you add supply demand if you want to use supply demand? I mean, I don't know what you're using for supply demand, but whatever works. Look, the thing about the harmonic pattern framework is that it's not only the patterns, it's the profit targets, it's the hop level, understanding of the 1-2, type 1, type 2. All right, so all these other harmonic pattern outfits that are just teaching you a bat or whatever, they don't understand reaction reversal dynamics that make all the difference in the world of knowing where the big opportunities are coming together. Didn't Coinbase have something recently? Here's Coinbase after the IPO getting destroyed, I think on the hourly. Where'd it go? Let me bring it up on HPC Pro. Here's Coinbase. I think it was an hourly crab pattern developed. For those that are interested, or I know a lot of people asked me about it. Oh, here it was. Bat pattern. Around the 225 level, folks. So if we get this, um, we get another retest. I don't know if we will, but that was the first big pattern I've seen since the thing collapsed coming out. There's the IPO. This reminds me of Snap too. I don't have a Nifty feed. I'll have to look at that. Hey, Michael, what's happening? Yeah, that DXY, the crab patterns on DXY for sure. Really quick, I'll couple currency pairs and we'll wrap up. It's 2 o'clock. Nasdaq's plus 94, 95. S&P is up 42. Man, that's a bear. Not a bear, it's a bull, but the S&P stuff is insanely bullish. Here's dollar index. Yeah, it just got rejected off of 93, right? Yeah, I think this is what we talked about. It didn't change from a couple weeks ago. Dang it, that stupid thing of I've got this news thing I can't get rid of. Yeah, there you go. Thanks, Michael. Appreciate it. Yeah, the DXY pattern. There's beautiful type 1 reaction. And this is probably going to happen fast. Did we get HSI up there? No. So this is one way to see that this is just a reaction on dollar index. There's no HSI up here. No HSI there. All right, so it's definitely going to come off. And it's type 1 reaction material. Look, we go back down to target 1 on that. And then we probably just do the dance. Come back up, type 2 to the hop, and then the dollar loses its shirt. Something like that. Yeah. Yeah, you look at volume. Yeah, that's a good way to go. Volume, exhaustion's always helpful. So definitely. What's up, guys? Hey, Joe, Brian, how you guys doing? All right, Youssef, we'll look at Coca-Cola again. I'll do the 30-second review, even though we spent 20 minutes on it in the course. Here's Coca-Cola. Beautiful bat pattern, bearish bat pattern. Remember what we were saying? I think we talked about this. You and I talked about this in the course. I think you brought it up. That I love Coca-Cola. Hey, Warren Buffett, he can be a long-term holder, so can I. But where am I going to enter this? Maybe target 1, 52.30. With the thought being that if Coke is going to be in a major multi-year uptrend continuation, you're going to have a reaction off the bearish pattern, and then you're just going to go and blow through. That's what you want to see. I mean, you want to see that in your best long-term trending situations. Here's Coca-Cola now going back on a weekly chart. Take a look. We see any patterns? Sure. This is a weekly, just 2 years. And this is actually good to take note of because look at that hop level. This looked incredibly strong going into 2020. Looked like that crab was going to fail, right? I mean, look at this go sideways. It forms terminal bar and does a harmonic pause. Let's see here. 3, 6, 9, 12, 15, 18, 21, 26, 7. There's bar 30, bar 30. And you finally trigger HSI. Is that a coincidence? At the hop? Kind of looks like NASDAQ right now, right? Yeah, that's what we want to look for. I mean, we're in the ballpark vicinity, no doubt. You almost got a perfect type 1 reaction on that first move, too. So what does that tell you? The 1618 is highly reactive when you hit it the first time, and then you get confirmation in the vicinity of a 1618. Look out. That's what happened here, and then look, it happened here on the downside. There, your HSI triggered right there. The arrow pops up and tells you, okay, I'm done. So now Coke comes back and all the way here. Now we've got a bearish reading. Again, another bearish reading. So I'm not jumping into Coca-Cola until I get either a bullish pattern reading or I get a bullish signal. Unbelievable. Hold on. Hold on. Just can't even deal. Sorry, guys. Thank you. God, that's so much easier. So keep an eye on that stuff, really. That's the way that I would read it. I would still look at this stuff, in that same regard, and take a look at other snails like, Altria. It's one of my favorites. Right? These are just big, slow moving patterns that give you phenomenal entries. That's one. That's Altria. Another one, which was ExxonMobil or XLE. All right. So, how do we know these? Remember that? Or that was the weekly. I think even on the monthly was better. So it's my whole point being is that with all of these, no matter what, we want to size up our patterns, our HSI, and trigger against using, utilize those long-term triggers. Here on ExxonMobil on the monthly, you had 2 HSI arrows, and you had other patterns there as well. So again, it's just a lot of long-term stuff to look at, and I think I mentioned this last time. Let me see if I can pull it out. Let's go back and look at some old patterns. Let's see if we can get some data history going back. Let me check this out on I don't know, things like IBM. We go back on the weekly time frame. And this is just going off of what the software is generating. And that's how I would read it. I would just, if you're looking for the opportunity, well, where's the hop level? Where's XA? Where are the triggers? I mean, IBM right now is in the midst of retesting a bearish pattern at 160. You squeeze between those two levels, 120 on the downside. But go back in history. Let's go to the monthly. I think there's a couple. Yeah, look at the monthly chart here on IBM. Okay, see a pattern? Look, that's going back 20 something years. There's 95. You go back 20 years. A deep crab, folks. Every time it hit target 2, it's been bouncing. That's at 113. And that's a monthly chart. That's a beautiful chart too, by the way. So, am I triggering off of that? No, because look, I'm now overbought on HSI on the monthly. Seeing a lot of this, there's a lot of these long-term patterns that are coming together like this, and they've either completed or are they just continuing a downtrend, and or they're about to register an overbought, or oh, yeah, overbought. That's not what you want to see. Uh, Here's the other one. What was it? JP Morgan. Let me go there on a daily, I think it was. Yeah, daily. Now this one's overshooting this crab pattern, immediate crab pattern. But we're just playing this. Look for this just to bounce between HSI, HSI. On the daily, we triggered that around 151. But I know this thing came up, almost registered an overbought again. Let me go to, I think I wanted to show the weekly. No, maybe it was the monthly on the historical reference of this. Oh, this was the, okay. Yeah, going back, a couple things to look at, some of these bigger patterns. Take a look at the 1-2 on JP Morgan here back at 20 years ago. Still, we continue to see major pattern, complete, form, do some kind of major type 1 move. And all of these big structures seem to find themselves wanting to do the retest. Just historically, as much as they do it on the intraday, they want to do it historically. So that's relevant for where we are now because we're not retesting anything at the moment. It's not like we're up against any resistance. So anything that we form, or a way to think about this entire market, is to look for these 1618 extensions like this. I mean, in its essence, the 1618 is just harmonic, is the harmonic ratio unto itself, much like the ABCD structure is a minimum pattern constraint. So even on a monthly, our 1618 on JP Morgan, that's around 180. But I will trigger off of any pattern daily, weekly, and treat that as a reaction. Come on, what's going on here? Is that hung up? 1 second. Yeah, I might have to reload. Let me switch. Let me go back here. Um, bring up daily time frame. Oh, you wanted to look at British pound. That was the thing before I clear out. Here's British pound. British pound on the daily. What did you say that was? Was that daily or weekly? I think we covered the Gartley before. I'll go over to the trading view version in a second, but there's a Gartley. It took a while. That's not your typical Gartley. I will tell you that that's usually a Gartley will see a lot quicker reaction than that, but there's completion, there's the arrow, but there's the check back point. That's a type 1, and I would look for that retest. You're done on that trade. You break the uptrend, or you break this downtrend, you will initiate the retest back to 141. Nice, nice pattern though. I don't know what the back-to-back on the daily you said. Yeah, you use that Gartley. I mean, that Gartley's got it all. I also know why that's not showing up. Here's why it's not showing up. Let's get all the patterns. There you go. Yeah, I think there's something on the monthly or weekly British pound. Let me see the weekly. I know the 140 level British pound is historically has been firm resistance, but I don't know what that is. Let me go to the 4 hour. Maybe that's what you're referring to. I think the 138 level's it for now, and you go back and you retest the daily level at 142. That gets you back to complete the whole structure. If you can come back to hit that terminal bar, especially the ABCD at around 140, 125, that's it. So that's a good one. Again, there's not much happening in the currency space in general. Here's euro. Like, look at euro pound. That cable's nothing. It's just sideways. I mean, yes, there's patterns here, but you'd have to wait for a trigger. This is a good example here, folks. Look, by metric, it's a crab. Definition, absolutely, is a crab pattern. It's harmonic because B points at a 618, your XA is at a 1618, all the other metrics are there. But where's the confirmation? More like down in here, not at 8630, but more like 8550 with those arrows. And your hop level, which got hit, was 8475. But you're doing nothing. You spend 30 bars, more than 30 bars going sideways, and then we have a counter HSI signal right there. So that basically negates the trade. And you scratch it or you get defensive if it rolls over. I would say this goes to the hop. And we look for the next HSI trigger down at the hop, retests at 84.74. But a lot of these currency pairs, I don't know, they have just gone to sleep for 6 months. No doubt. A few of them, some of the exotics are moving quite nicely, but, and especially some of those like South American pairs, but for the most part, no. The past 8 months have just been, sideways action. There's Kiwi yen. Speaking of exotics, just rolling over, but not doing much at this hop level with HSI. Kind of looks like it's trying to fail it in a lot of ways, but we haven't moved. You're 150 pips above where you were 6 months ago. A lot going on there. Not going on there, but I'm keeping my eye on dollar index with all of that. Really quick, let's take a look at Bitcoin relating to currencies. Here's the Bitcoin dollar feed on the 4-hour chart. Speaking about doing nothing, really since the last time we even got in on this, which was a few weeks ago. Listen, 31,940 is probably the number. And you do have a couple of HSIs here. I mean, I'm not going to dismiss this on the 4-hour chart, but again, another situation where you're going sideways. You're not reacting. You haven't gone to target 2. And that's not what you want to see. And again, you want to see something develop without even having to force it. If it's looking at what your last HSI was, which is what this arrow is, which is bearish, or just kind of poking underneath to look at what, say, Amplified is doing, Amplified RSI. Here's the HSI indicator. Does not look like it wants to do much. The last over extreme reading was an overbought reading, and so I'd have to assume we're still something like this on the indicator. trending lower. Ethereum, a little more constructive, but not that much. Not like it's doing anything different. If anything, look, I sketched out this bat pattern that we had here, but it's a clear type 1, and the software didn't even pick it up. It picked up some things on the 4 hour, namely bat, crab, things like that. But I hate to say it, Ethereum, though, has done the duck roll down, and it's already in a type 2 return. Again, look at the session on type 2 return. You're going to see just about everything that you typically see in a type 2 return, except for the fact it hasn't gotten all the way to the retest of the zone. And that takes us to around 1700, folks. Any way you slice it, 1700 on Ethereum. And it's not, hey, the crypto move was amazing, but it's over. It's over. And I'll just wrap up with this because, again, it's by far been the best one, and it's been like the canary in the coal mine, has been Doge. And Doge is rolling over. We talked about this last week. Our last session actually was 2 weeks ago, and this was the primer for the webinar sessions of the fact that this was a type 1 trade and it was rolling over exactly at target 1, and that would have to go back to XA, if not all the way to the hop at 10 cents, and trigger HSI. So these HSI readings here on Doge are meaningless. Maybe you get a little pop, but the bigger opportunity will not happen until you get down to that lower level. Yeah, Dalton's asking you take 20% off the market cap and another 20% and you get down there. So the 400 billion that I was saying on the crypto market cap is just that's the reset scenario. Take a look. And I'll wrap up with this because it's disappointing, no doubt. You wanted to see crypto do it and have the big breakthrough and this be the year. But it's not doing it. Look at what just happened here on the 4 hour. This is in the last couple of weeks. Another bearish ABCD. We come back for a perfect retest. And now where do we go? We go to target 2. We have to. Minimum. And not to mention, the fact that we got an ABCD at this level suggests extreme continuation. That's what that means. You get an ABCD down there, yeah. And your crypto, your 886 is at 400 billion. Folks, this is really unraveled in a way this is going to end up being a nasty B point at a 55%, very close. Maybe it's a Gartley, maybe it's a bat, but it's either going to 786 or 886. The 786 is, a little bit higher, but it really doesn't matter. 650 billion versus 400 billion. I'll take right in between. Um, all right, only because you asked. All right, really quick. Matic, and that's it. This is the last one. And I don't even take tips. Here's a tip. Go get the software because it does everything for you. Like you wouldn't have to ask me to look at this. You just click a button and you can see nothing there. Do I have a pattern? No. Do I have confirmation or HSI or something? Yeah, a little bit, but nothing that's automatically generating. Go to 1 minute. All right, not much. I mean, look, it's just that crypto on the bullish side is not acting well at all. On the bearish side, that's probably where I would favor it, even after these extremely depressed levels, and still just run the type 1, type 2 framework. All right, there's the last bearish complex structure, and then there's the ABCD, and look what the ABCD's done. Even the ABCD at 115, okay, with a target at 105, that's a great trade. It's a great risk reward ratio. But then at this point, you're trading a penny stock. And that's the question that I guess it came to my realization is when I stopped on the Doge a couple of months ago, when everything lined up, and with these other crypto. Do I want to chase crypto that is probably a glorified, overpriced penny stock whose commissions are 10 times what a regular stock would cost? I mean, that's really where you have to ask yourself, what are you putting your money into? If we're in this kind of a trend, such an extreme downtrend now, which we are after such an extreme move, and something like Matic just does even if it does a 50% or a 618 reset, it's resetting. It peaked. It's already done. So look, your 618 on Matic, you've already tested that. Your 886 on Matic is, look down here at around what, 50, 45 cents, 35 cents, 25 cents. I mean, that's the thing is the 886, I wouldn't be surprised to get down there. And you'd look at it and you'd say, well, we're off of a penny or 4 cents, so we're up 600% at 25%, at 25 cents. That's how you got to be thinking about this. I would not want to be waiting on anything. I mean, the death of capital happens when you get stuck in positions, and you're not able to be flexible, and you just sit on something hoping it works out. That's you want to have a short career, you keep doing that. And until we break some trend lines, until we get some real construction going, this stuff is sucking wind. So I'm going to stay away from it. You got too much stuff that needs a lot of work before I would even look at it again. And here's Litecoin, and you guys got me going longer than I wanted to, but look, a parabolic move, it's over. It's over. And Litecoin, like the rest of them, they either have to form some beautiful pattern or reset to the 886. Yeah, that's around 80 bucks. That's really a lot going on here, folks, with this stuff where we're at a point where you need to be patient and you got to let this do its thing. It's going to bleed for a while, but there's other things that we want to look at, other markets, stocks, keep our eye on stuff like gold. But again, a lot going on here, but you need to be flexible in where you're focusing your attention. Don't get stuck. Don't get stuck on one area. So quickly to review, the big update and big announcement is to get your watch list on Harmonic Pattern Collection Lite. Simply click the FX button, go to your invite only scripts, and your watch list will be right there. And it'll pop up as I started today. And I said in our gold members session yesterday, there are limitations with the script, so we can only add 8 symbols per screen, but you can change that up. Again, go into the settings and you can save your screens. You can, put your inputs in how you'd like. Also, just remember, you want the big patterns, so click large, hit OK, and run your screens there, and go off of just run off your charts, run off your pattern matches, and run your watch list on the right side because they don't have chart linking. So there's definite limitations. We did everything we could to get as many symbols in each module as possible to get the linking. I think they still have a ways to go with their Pine script, but we've made progress with this, and I know we're going to make more progress with this to come. So if you folks haven't accessed the program, please send an email to harmonictrader@gmail.com and I can set you up with that. That's the best place to start. And then, of course, go to Harmonic Trader and get with all of our resources, get with the books, get with the basic membership. That's that's what I have for today, everybody. Thanks again. I appreciate it. We'll be back next Friday. Until then, have a great week, great weekend, and go get